And welcome back to today's Daily Dose of Market Insights. Very good morning. I'm Kelvin here. Today will be the Wednesday, the 10th of September 2025. So before we start, as usual, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. All right, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, let's have a quick recap what has taken shape yesterday in terms of economic data release, events, and as well as their impact on the intraday movement on those broad-based cross-asset classes that we cover on a daily basis, which is the major US dollar pair, the major stock indices, and the two key commodities, gold XAU/USD, and West Texas crude oil. And also relevant news flow and economic data releases that has been announced earlier today's Asia session before the start of our daily dose at 11 a.m. Singapore time. So yesterday's key US economic data release was the annual revision of that non-farm payroll data. So let me share with you guys what is this data about. So basically, this is a normal payroll data, is an annual revision. So annually during this period in time, every year around September, the statistical body, they call it the Bureau of Labor Statistics, will do this annual revision to their previous 12 months data. So they work according to financial year. So the financial starts from April to March. So this particular data is 12-month data starting from 1st of April 2024 till March 2025. So this is something like a financial year. So the non-farm payroll annual revision was actually revised downwards much more than what market is expecting. So market is expecting an annualized figure of negative 818K jobs added in total, but it came in worse than expected. So it actually declined more than what market has penciled in by negative 911K. And on top of this negative 911K, we do have this jawbone by key US Federal Reserve officials, which is the Treasury Secretary Bissett. So Bissett yesterday during a media interview after the release of that revised non-farm payroll data, stating that the US labor market is weak and the US Federal Reserve should change its policy stance after a government agency revised the US jobs data to show weaker hiring in the year through March. All right, so right now there is a potential anticipation that the Fed will start to do something about their wait and see policy starting this year. All right, since this year onwards. All right, so since this year the Fed didn't actually cut rates, they actually keep on mentioning wait and see due to the risk of sticky inflation. So right now market participants have started to price in a 25 basis point cut, almost 100%, by looking at the CME Fed Watch 2. All right, so this has already been priced into the market. So what market now is looking at, will there be a potential chance of a 50 basis point cut, which is rather low right now. So market is only looking at only a 6.3% chance that the Fed may do more by cutting 50 basis point on next week, which is on the 17th of September, to bring it down to 3.75% to 4%. But what the market is expecting right now, after last Friday non-farm payroll data release, which also came in weaker than expected for the month of August, that market now has penciled in at least 3 interest rate cut before 2025 ends. That means the first cut potentially coming in on the 17th of September, which is a high chance, almost 100% chance already, because the other 6% chance is a 50 basis point cut. And right now, they are looking at another 25 basis point cut, which is a high chance as well, at 79%, to bring it down to 3.75% to 4% on the next meeting, which is the 29th of October. And subsequently, on the last meeting of the year, which is 10th of December, the market is expecting a high probability as well, which is more 66% probability, not as high as about 70%, 80%, but I still consider a significant high odds that the Fed would do a third cut to bring it down to 3.5% to 3.75%. And now they are just expecting next year to be at 2.75% to 3.3 to 2.75% to 3% before by the end of December 2026. All right. So what we could see right now over here is that is being penciled into the market. So what's key over here is that to actually push the market further, that means to create more down volatility, especially in the FX market, for the US dollar to crack below a key support of 97.3. Later I'll share the chart again very quickly on the US dollar index. That level is very key. Is that during the 17th of September meeting, the Fed will release the latest dot plot. So if this latest dot plot starts to turn much more dovish, that means i.e. During this dot plot, they will actually release their next year and long-term economic projection on GDP growth, inflation trend, and as well as where they expect the Fed funds rate will be end of this year, end of 2026, and the longer run. So if they start to pencil in a lower economic GDP growth for 2026, and also for 2026, they expect the Fed funds rate to be much lower than 2.75% and 3%, where the market is expecting right now, that could create that downside volatility for the US dollar to go much further. Right, so that is the key. So right now, market is really looking for a dovish Fed pivot. So to see how much further this dovish Fed pivot will go will only come forth during the 17th of September 2025 meeting, which is much important for the market's participants. So what you could see over here is that yes, despite the annualized non-farm payroll data that was released yesterday that came in below expectation, the US dollar didn't actually fall further because that's already been priced into the market. So what I could see over here is that instead the US dollar bounced slightly yesterday. It bounces slightly yesterday. So we see the US dollar index over here where it attempt to test 97.25. So yesterday it printed 97.25. Then thereafter, during the US session, it starts to bounce and close higher at 0.3%, managed to survive at the 97.3. So why this 97.3 on the US dollar index is very, very important for the FX market. If you go to the monthly chart, a picture paints 1,000 words. So this is very clear. This 97.3 managed to survive in June and July, as well as August. And 97.3 is the current lower boundary of this long-term ascending channel that has been in place since May 2011 low. So if we have a bearish breakdown with a monthly close below 97.3, potentially we may start to see a structural downtrend on the US dollar index. That means we're talking about a multi-month US dollar weakness going forward, because this being the US dollar index, using as a gauge of broad-based dollar strength or dollar weakness based on its charts itself over here. And also yesterday, given the fact that the Fed dovish pivot is still kind of intact, yes, we see a dollar bounce, but this dollar bounce didn't derail the ongoing bullish trend that's being seen in the major US stock indices. So all the three major stock US indices closed in the green yesterday. The SPX up by 0.27%, the Nasdaq up 0.33%, the Dow Jones Industrial Average up 0.4%, and the underperformer is the Russell 2000, down by negative 0.55%. So if you look at the heat map of the S&P 500 very quickly, where is the heat map? Yeah, the heat map over here. So this heat map over here shows that the mega cap technology stocks code continues to bask in a bullish limelight yesterday, with the acceptance of Microsoft, which closed almost unchanged, and Apple, which is down by negative 1.48%. So yesterday, there's this specific related risk event that kind of a solely focus on Apple. So it's a kind of a localized, we call it event that impacted the share price of Apple, which is the showcase of Apple new lineup of iPhone. So yesterday, Apple showcased iPhone 17 over here. So the reason over here is that Apple stocks sold off yesterday after the release of this iPhone 17 is potentially due to the pricing as well. So what do I mean by the pricing? So if we to look at it over here, so basically the iPhone 17 Pro starts at US dollar 100,099. So that's only $100 boost from the previous iPhone 16 Pro model. And the normal tier of iPhone, which is the iPhone 17, cost at US dollar 799. So that is the same price as iPhone 16. And also at this newly product launched yesterday from Apple, they actually showcased this Apple, where is it? Give me a minute. Yeah, Apple iPhone Air. So it's something like a MacBook Air model. So it's a very thin iPhone Air model that showcase a very thin design, but battery life and usability concerns remains over here. So that actually took a hit on Apple share price yesterday, which is down by negative 1% or so. But that didn't actually derail the bullishness of the S&P 500 and the Nasdaq 100, given the fact that the other mega cap technology stock continues to bask in a bullish limelight, where Nvidia is up by 1.46%, Amazon up 1%, Google and Meta up by a whopping 2.5% and 1.8% respectively. All right, so that causes the S&P 500 to hit a fresh all-time closing high, but not an intraday high. So what do I mean by that? So if you look at the SPX index yesterday over here, okay, so this is the SPX index. So what it did over here is that yesterday it hit a fresh all-time closing high over here, okay, but it didn't hit a fresh all-time intraday high because the fresh all-time intraday high was at 6,533 that was printed on the 5th of September. So, but overall, based on the current price action, it continues to remain firm above the 20-day moving average. All right. So over in today's Asia session, also we start to see a positive risk on scenario in the major Asia Pacific stock index, where the Nikkei 225 continues to up by 0.5%. The Hang Seng index is up by 1%, with the CSI 300 almost down by negative 0.22%. So the reason why the Hang Seng index is up, because it managed to break above a medium-term ascending triangle range resistance, which I have highlighted on Monday over here. So let's very quickly look at the chart of the Hong Kong 33 over here. Where's the Hong Kong 33? All right, so the Hong Kong 33 managed to break out above that 25,860, which is the bullish ascending channel range resistance. All right, so now the next resistance level to watch will be 26,530, 26,790. So this is a bullish breakout from a 4-week plus of range configuration. So that explains to us the current positive momentum that is being seen on the Hong Kong 33 or the Hang Seng index. And also the Japan 225, yesterday it did a pullback, and that pullback did a minor bullish reversal right at our pivotal support, which we highlighted earlier on Monday at 43,060, 42,850 level. All right, so that's for the major Asia Pacific indices. So they are still evolving in a bullish trend, following with a positive feedback loop that is being seen on the major US stock indices yesterday, and as well as this up and coming anticipated Fed dovish pivot that is going to be taking place next week. And very quickly, going to the FX market right now, if we go to the 1-day rolling performance, taking into account of the last 24 hours, right now what we could see is that the dollar has started to weaken as we are speaking during the start of the Asia session. So the dollar is now the weakest against the Aussie dollar, which is the dollar is down by negative 0.3% against the Aussie dollar. That is also having a close relationship with the Kiwi, where the dollar is also weakening the most against the second most against the Kiwi at negative 0.2% over here. So net overall, we continues to see potential dollar weakness going forward. All right, given the fact that the US dollar index is still trading below that 20-day and the 50-day moving average if you look at from a daily time frame, right over here. Okay, so now the next key thing I want to share with you guys over here is more pertaining to the commodities market. So yesterday, Israel did something unprecedented over here, which they strikes other Middle Eastern sovereign states using the backdrop stating that the Hamas leadership is being found in the Qatari capital of Doha. So that actually create a geopolitical risk premium uptick. So what it means that this is an unprecedented strike. That means Israel, given the situation, what it did yesterday, they could actually strike other sovereign states target or infrastructure other than Gaza, in Gaza, that they claim that this particular sovereign state is housing Hamas leadership. All right, so that create a bounce in the West Texas crude oil yesterday, because given the fact that the Middle Eastern situation is where the OPEC Plus cartel is being located, and that could kind of influence the supply of oil in the Middle East. If Israel starts to strike other Middle Eastern oil supply or oil production facilities. So what we could see is that oil prices yesterday rose over here, and in today's Asia session is up by 0.6%. But what's interesting over here is that the previous rise on Monday, since Monday, managed to actually retreat right exactly at the 20-day moving average, and which is also our pivotal resistance that we highlighted earlier at 64.10. So given the fact that it can't break above 64.10, I cannot be so convinced that we are now starts to see a medium-term uptrend phase for West Texas oil, or a medium-term mean reversion rebound phase from West Texas oil to actually go back up to 65 or $66 per barrel. So right now there is still some rejection at the 64.10 level. That means indicating that market participants in the oil market are still not so hesitant to push prices up. So I'll be watching very closely today at the 62.89 level on West Texas oil. So if we start to see a breakdown below 62.89 level, it means that the rally that has taken shape on Monday, this Monday, is more like a minor corrective rebound, minor corrective rebound sequence within a downtrend phase. All right, within a downtrend, within a downtrend phase. That means, i.e., there could be a risk that the oil price may actually retest 61.85, followed by the next intermediate support at 61.30, which is the gap up of 2nd of June 2025. So that's for the oil market. And given the fact that there's this rising geopolitical risk premium, coupled with the dollar that still continues to remain lackluster, that actually benefited gold yesterday. So gold continues to trade rather firm over here. All right. So despite the fact that it actually closed almost unchanged over here. So right now, for gold price, it continues to hover at that 3,000, above that 3,600 level. So from a shorter term perspective over here, so very quickly, let me share with you the gold price. All right. So the gold price yesterday, it pulled back as intended. So pullback managed to stall at our first support level at the 3,627, which is the lower boundary of this steeper minor ascending channel from the low of 29th of August. So watching closely the key pivotal short-term support at 3,600 to potentially maintain this ongoing short-term bullish momentum for gold. All right. So that sum up the first segment of the daily dose. So now let me move on to the second segment, which I'll share with you one interesting chart of the day from a technical analysis perspective. So let me expand my screen. All right. So for my chart of the day, all right, let me share very quickly. So for today's chart of the day, will be focused on one of the major US stock indices, which is the US Wall Street 30 over here. So this US Wall Street 30 has been consolidating since hitting a fresh all-time high on 22nd of August over here. So the way it consolidates, it continues to print a series of higher low after a retest on the 20-day moving average on the 2nd of September. And also since last Friday, the hourly RSI has going to print a series of higher low supported by this parallel ascending trend line, which indicate that short-term bullish momentum remains intact. So first support level to watch out for today will be yesterday's minor V-shaped recovery at 45,480. Key pivotal support zone will be at 45,290, 45,175, given that he hasn't broken out above our first resistance level, which is the current all-time high level that is being tested on last Friday as well at 45,780. So if we have an hourly close later at 45,780, I could tighten my pivotal support level to 45,480. Next resistance level to watch will be 46,060 slash 46,180, followed by 46,365, 46,400, which being defined by a Fibo extension cluster level, and also heading up towards the top of this minor ascending channel that has been in play since the low of 1st of August this year. Only a bearish breakdown below 45,175 will invalidate today's bullish bias on the US Wall Street 30 that's representing the Dow Jones Industrial Average to see another round of a minor corrective decline sequence to retest the 2nd of September minor swing low and the former minor congestion area of 21st of August 2025 at 45,945. Only a breakdown below 45,945 will see a deeper minor corrective decline to retest the medium-term support level at 44,715, which is also confluencing with the rising 50-day moving average. So that's for the chart of the day for today, which I featured the US Wall Street 30 due to its interesting technical configuration. Lastly, right now, let us very quickly go to what are the key data to look out for this today itself. So today will be Wednesday over here. So Wednesday, okay, let me share very quickly. Just now I forgot to share with you all the China inflation data, which is out earlier. Yes, on the headline, we see the inflation rate year on year is down below market expecting. So market is expecting at negative 0.2%, but it came in at negative 0.4%. Initially, it was worse than expected, but the PPI improved. So PPI, which is factory gate prices, actually came in within expectation, negative 2.9%, much better than the previous print of negative 3.6%. But let me share with you the inflation rate. So if you strip out the inflation rate of volatile items like excluding food and energy over here, so let me share you guys, yeah, this is the one. So what you could see is that this blue line over here, this dark blue line is the consumer inflation, the headline one that I share with you guys. Yes, it may seem that it's slipping downwards because of a risk of, then people will look at, hey, is this a risk of deflation in China? But however, the risk of deflation in China has already subsided. By if you take into the core consumer inflation, you see the core consumer inflation in fact is actually recovering and starts to print a higher low. And based on the August print, which is this print, that means I strip out energy and food and energy, it came in at a positive 0.9% year on year for August, 1 basis point high. Where is it? Give me, yeah, 1 basis point higher from 0.8% that was printed in the previous month of July. So that actually indicates that the risk of deflation in China has subsided, which also in turn supports that ongoing bullishness today that's being seen on the Hang Seng indices. All right, okay, now very quickly, let us look at other data to look out for today. So today we have factory gate prices out in the US, PPI data that could influence almost all asset classes because they're also considered as an inflationary trend. But that one is more for the cost of doing business, especially those guys in the manufacturing sector. So core PPI year on year, market is expecting a slight dip down towards 3.5% from 3.7% that was printed in July. All right, and thereafter at 10:30 p.m. Singapore time, you have the weekly EIA crude oil stockpile change, so that could potentially influence the West Texas crude oil. Then followed by where is it? Yeah. So tomorrow, early Asia's late night At early morning Asia session at 1 a.m., there's no Federal Reserve official speaking. Given that right now they are in a kind of a blackout stage, because given that they can't speak because due to next week up and coming FOMC meeting on the 17th of September. And also before the start of our daily dose tomorrow at 7:50 a.m. Singapore time, we have Japanese factory gate prices out, PPI, year on year for the month of August. So market is expecting a slight uptick to 2.7% year on year from 2.6%. So that could potentially influence the dollar yen and the yen crosses. So with that, that sum up today's daily dose of market insights. Kelvin here signing off. I wish you guys a great day ahead and we shall speak again tomorrow. Thank you.